also certainly gaining in European trading today. But of course, they've been left in the dust by what is happening over at Tesla. We are continuing to obviously, with wide-eyed amazement, watch what is happening with Tesla. But let's talk more about what is going on with the auto sector. Let's go to Scarlet.
Thanks, Guy. Yeah, left in the dust is a generous way of putting it, because auto sector, whether you're looking at what's happening in Europe, in the U.S. or Asia, is in the red, struggling, of course, as these companies had to shut down their operations completely when COVID-19 first struck. Now, in Europe, we know that the auto sector was in particular already trying to revamp their operations before COVID-19. Their specific challenge, of course, includes electrification. You talked about Tesla. They're behind. They've fallen behind the market leader. And now that they need to conserve cash, that tech advantage threatens to gap open even more, in that they can't spend the money that they need to catch up. The headline today, just think about what I read, Jaguar is delaying its latest electric car model until next October. So that just gives you a sense. The auto sector as a whole is much more important for Europe than it is in the United States. In Europe, it makes up 7% of GDP, 14 million jobs. The U.S. auto sector, by contrast, is less consequential on every count, especially total market share, although it does get a little bit closer there because for now it doesn't include Tesla.
Well, speaking of, as our stock of the hour is Tesla. Literally, Guy in every commercial break has been like, "Oh my God, it's at this price. It's up 82% in 2 days." So, Scar, that's a league of its own at this point.
League of its own, absolutely. It's going to hold a Battery Day event in late September, and I bring this up because that's the catalyst for today's advance. Dan Ives over at Wedbush says that Tesla could announce game-changing developments at that event, but it's not until late September. In the meantime, Tesla could really be stock of the month and stock of the year, because it's up more than 60% in July. It's only fallen once, and since its March low, it's gone from $361 to almost $1,800. That big leg higher at the end there was this month when Tesla reported better than expected second quarter delivery numbers. And that's raised expectations. It could post a GAAP profit for the second quarter, which would mark the fourth straight quarter of profit. And that is the last hurdle the company needs for inclusion in the S&P 500, which of course would confer prestige and also give passive index funds a big reason to buy up all those Tesla shares so that they could then better track the index. Tesla's market cap is now over $325 billion. So if you look at the S&P 500, which again, it's not a member of, that would make it the 10th biggest company, bigger than P&G, bigger than JP Morgan, bigger than United Health or ExxonMobil, and the biggest automaker in the world as well. Pete Dioteris, my producer, came up with this fantastic chart, a great way to compare and contrast Tesla with the rest of the automakers. Its market cap per vehicle sold is $870,000. Look at that. 13 times Porsche's market cap per vehicle sold, and 290 times what Fiat trades at. I mean, it's like you're not even comparing companies in the same sector.